Hello and welcome to the Dash News Podcast. This is episode 125. I'm Mark Mason and I'm joined by my fellow co-host and amigo, Joel Valenzuela. How's it going, Joel?
I'm doing quite well. I mean, what else could you wish for, right? I got my old
Staying
Dash
right?
convention little polo shirt. Yeah.
Old school.
Wow.
Yes.
I hope you've washed since then.
Yes, I just pulled it out of the dryer today. Don't worry.
You have watched that since you come home.
Don't worry.
Yeah.
I've definitely washed out all the Dashy beers out of there.
Excellent. And today, as always, we have a special guest.
Very special.
Like this particular guest. I mean, if you're in the Dash community, you should really know who this guy is. He's, you could actually argue he's more popular than Stay Dashy himself.
Ooh.
I don't believe that.
What? Now, why do I say that? Because this gentleman has made Dash history. He won the double. He is a Dash Trust Protector. He is a Dash Investment Foundation Supervisor. And he's also very well known in the Dash community by the alias Walter. So let's welcome to the podcast, Michael Lewis. How's it going, Michael?
Hey, great. Nice to see you both, and thanks for having me on.
It's a fantastic.
It's been a long time. Yeah, it's been a long time in coming. So
yes,
real pleasure.
You're really a champion in three domains: the M&O community, the trust, and the diff. So I'm going to bend the knee to Triple C right here.
It's been a busy year. Yeah.
Exactly. Right. So obviously, people listen to this that are really into the Dash. They're going to know who you are. But let's learn who Michael is. How did you first get involved in the Dash community?
Okay. Well, we're going back to probably April, May 2014. It's a long time ago now. Already into Bitcoin and crypto in general. Quite novice back then though, and really just cutting my teeth and learning as much as I could, like a sponge, trying to understand this fantastic new technology and solutions and how it could possibly change the world, in a massive way. And I found that really exciting. I was, there was like the supernova of like explosion of cryptocurrencies, altcoins as they were called back then, and I was just reading up about them, and I came across what was Xcoin, Darkcoin. Well, I think it just rebranded to Darkcoin, and I read up about Evan, and Evan was kind of like the only guy in the space that went public and kind of committed his time for 2 years and said, hey, I like Bitcoin, but I've seen all of these problems with it that I want to fix, and they don't want to listen to me. So I'm going to do it with Darkcoin, and I just I was sold straight away. I just thought, you bet the jockey, and I really kind of had a good feeling about Evan. He seemed honest and sincere, and he was gonna give it a good go, and that's a lot more than could be said for a lot of the other projects that were in the space at the time. I started buying Dash, and I ended up paying a lot of money for some Dash. I paid $16 at one point in 2014. I know,
big spender.
And I watched it horrifically go all the way back down to $1, man. It killed me, but I kept buying because I've always believed in the project, no matter what the price is on any given day. The innovation, the forward thinking, the actual development, there was actual development going on from the outset. We were doing things like Darksend. We created the second layer. We created masternodes. We did instant send, and all these kind of things happened within like 12 to 18 months. So and that's kind of how I really got into Darkcoin to start with, and I wish I could have given more time in the earlier days, but I was building up my own real life business, doing IT and tech and things. So I kind of had, I kind of wish I could have spent more time, but I just I just left it at being an active community member and generally contributing where I could, and advising and helping out in any way I could to help build this community. And yeah, that's kind of my history with Dash. And fast forward 5 years now, it's nearly 6 years, and I just can't believe like how things have changed, how things have moved on in that 6 year period. It just, from what started out as just basically an idea, and a Genesis block, and it's just like to what it's turned into today. It's far exceeded my expectations, not just from an investment or from an investment standpoint, but as a community member and somebody who truly believes in crypto. It's just fantastic.
Yeah, so back in the early days, it seems to be one of the few things people try to attack about Dash is how things were sort of a mess in the early days. And I mean, right now it's been stable and one of the most boring crypto projects, if you call it that, from the drama standpoint. Yeah. I mean, let me put this way: macro drama, micro drama. There's always micro drama. There's always kooks and nonsense and other stuff like that. But in terms of spilling over problems, been very stable for better part of a half decade. But in the beginning, of course, you could say, first off, like multiple name rebrandings in a short period of time, mining bugs,
forks.
Just changing stuff like total supply, just like stuff going on. And I'm sure you experienced some of that real time, right?
Oh yeah, I did. And it's really easy to criticize from an armchair, but the clue was in the disclaimer on the software. This is alpha, really kind of highly experimental software, and it was, and you just everybody was just you just hope for the best and kind of and hope that things didn't break. But inevitably in the early days, things would break now and again, and I lost count of the amount of times my master nodes would drop offline, or there would be some issue, or that's just the nature of the game early on. But since 2015, 2016, the network is so much more stable. It's really matured, and it's and that's where you kind of think to yourself, wow, that's we are maturing, and as a network, we just don't get those kind of problems anymore. The early days were, as you quite rightly put it, a little bit rough, a little bit up and down, and some days you just didn't know whether it would all fall apart the next day. That's what it was like in the first year or so. You're just flying by the seat of your pants, but it was exciting, really cool.
Yeah.
So I want to take this opportunity to talk to you about the diff stuff, because in the Discord channels, there's always talk about Dash Investment Foundation, and I don't believe I've actually had this opportunity to speak to you in private, because we're good friends off camera as well. But so I'm going to kind of put you in the hot seat here a little bit. So recently there was a Dash Watch Masternode poll for the Dash Investment Foundation on what the Dash Investment Foundation should do with Dash received from the Treasury for the diff to invest. Yeah. And that outcome from that poll, the number one voted solution was 100% Dash to keep Treasury in. There was I think there was about 60 options with different variables, whether it's just 100% Dash, US dollars, gold, and all sorts of mixtures, and 100% Dash came out on top. Was this the outcome that you expected, and will the Dash Investment Foundation honor those results?
Firstly, we will absolutely honor the results. It's that's the whole reason for the poll. If we don't honor the results of the poll, then there's no bloody point doing it. So that's that one. We will honor the results of the poll. In answer to the second question, am I surprised? Nothing surprises me in this game, I'll be honest with you. But yeah. Is it what I expected the network to vote for? Probably not. I I thought they may vote a mixture, but it's such a difficult thing to do. You know, it is effectively a straw poll, and although it's legitimate in the sense that, you know, all the masternodes could vote if they wanted to. This wasn't, you know, this isn't just like some, you know, hand count in a room. You know, it did surprise me that that 100% Dash was top, but it shouldn't really, because if you think about it logically, now's not the time to be selling Dash. It's just cheap. You know, if you've got hold of good currency, you don't want to sell that off cheap. And I think maybe on balance, a lot of the masternodes figured that it may be not the best time to liquidate Dash for US dollar or gold or anything else. So yeah, you know, I respect that, and I think we will follow through on that. One thing I will say is that the reason we did the poll is because we're in a position where we're supervisors, so we're not in a position to make these kind of decisions on behalf of the network, if you see what I mean. We are supervisors, the key word here. We're just here to kind of make sure things go in the direction the network wants. So if we were to just arbitrarily or on our own volition decide to split it three ways to gold and US dollars and Dash, that might be fine over the course of 2 years, 3 years, and it certainly would reduce volatility. But yeah, you know, if it's not what the network wants, then we can't do that. But at the same stretch, if we arbitrarily decided to keep it all in Dash, and then Dash went to $20, the network would probably kick our asses. So, so you kind of got to get the balance right, you know. If we converted all to US dollars now, without consulting the network, and then Dash went to $500, we'd get our asses kicked again. So, what I'm trying to say is that, you know, some things are best left for the network to decide, because, yeah, we are only limited as to what we have authority on as supervisors. I don't think asset allocation is one of those. We're not qualified to do that. So the masternodes, you know, 100 masternodes or however many masternodes voted, if not more, they're going to come to a better decision than us. That's my view.
Yeah. So, in what parts? This is always something that one grapples with in terms of, there's the accountability versus micromanagement struggle. There's a sliding scale. There's that sweet spot right in. I wouldn't know if it's in the center, but it's somewhere where you get the maximum of everything. And obviously, if you just say, "Oh, I want to do all this," you know, basically dump a bunch of Dash and crash the price now, then the network's just to say hard pass. No, we're not doing that. Absolutely not. No way.
Yeah.
But as far as like, what do you have leeway to do? What kind of decisions do you have? Well, first off, you know, do you have leeway to do, and you want to retain leeway to have, unless you could colossally mess this thing up? As in, what kinds of decisions would you like to just make and report on them, rather than just say, "Hey guys, what do you think?"
Yeah, I think this will evolve over time. I think that's the best word to use to describe it. I know we've got enough evolution going on with Dash Core Group and their software, but there will be a parallel evolution with regards to Diff, because the reality is that this is unique. It's never been done before. Ryan and Fernando and others at Dash Core have really created something that, you know, it's a blank canvas. You know, legally it's all there, but it's a blank canvas. So, you know, in terms of supervisory role and what we can and cannot do, it's more a case of how we guide and influence the directors of the Diff, and how we direct that organization in the best interests of the DAO. We're intermediaries. We are physical representations of the Dash DAO in that respect. So our job, the best thing we can do as supervisors is to just use these quite a lot and listen to what the network is saying. Don't get me wrong. We don't just want to listen to one or two noisy people. That's not going to get us anywhere. But
whoever could you have in mind with that one?
Well, we all have opinions, but the best way to do that sometimes is a poll, and we're not going to use the poll mechanism a lot. We don't intend on doing it on a weekly or a monthly basis for every little decision, but certain really important things like how to allocate assets, what to invest in. I think at this stage it needs to go back to the network until we have a structure in place with a board of directors and staff. Because if the DIF is managing $1 billion, for example, in 5 or 10 years' time, which is quite possible, there will be a team. There will be a board of directors. There will be investment managers. There will be other members of staff help run that organization. There'll be administration. There'll be legal. There'll be all sorts of functions within that organization. It will be a proper company, an investment company. So you have to kind of bear that in mind as the network grows. You have to think that far ahead. So when you put it into context like that, then what we do as supervisors, we're just kind of like the guiding hands. We're just kind of trying to make sure that these things go in the right direction and that the wheels don't fall off. The best way to do that is to listen to what the network wants, pose a few things to the network, see what they think, and run with that. We're not going to put another poll up in 3 weeks' time if Dash goes to $200 to say, hey, should we change our asset allocation from 100% Dash to anything else? That's it for a year now, at least. I don't, unless something exceptional happens, I don't see any reason why we would need to go back to the network after that. So, as I said, there will be a period whilst we're getting this thing up and running where we will have to poll the network on a few things, but once those things are in place and they're set up, then it's largely set and forget. We'll just let things run, and that's how we plan on doing it at the DIF.
Okay, let's talk about currently where we're at with the DIF. I also agree with you. We're kind of in uncharted territory. We're living in interesting times, and we're creating our own destiny here, which is why we need so much network input.
Yes.
But I want to know what your thoughts on the community response to the first DIF proposal was like for you personally, because it was a bit of a roller coaster. You did get funded, but I want to know what you think personally. What were the lessons learned? Mm-hmm. And how will the DIF proceed for future proposal requests?
Okay. Firstly, I'm delighted that we got funded. It was a long conversation we had as supervisors and with the whole team at the DIF to decide when to put in for funding, how to put in for funding, why would we do that? You have to build a case for these things, and it's not just like we just woke up one morning and decided, hey, let's put a proposal in for 500 Dash. It's not something you just do on the cuff, off the cuff. So we thought long and hard about it, and the reality is the technicalities of investing and providing equity and taking equity stake in businesses and things like that is that everything has to be in a controlled, measured, managed, structured way, because that's how real world business works. You cannot negotiate investment positions in companies, especially if they're of any size already and they're looking for expansion funds and things like that, and they've already got private equity on board. They're not going to wait 6 to 10 months for a proposal to issue funds in order to give us equity. Certainly at any decent rate. They wouldn't give us very good terms at all. So that's the first hurdle we have to overcome, is squaring the wonderful way the Dash DAO works, which I think is a huge strength, that it's dynamic, it's nimble, and we can fund and defund things on a monthly basis. It's a living, breathing organism in that respect. But how do you square that with the real world and business? And business likes certainty. It needs structure. Good business is built on solid foundations, and funding from the diff is notoriously unstable for pretty much every proposal owner. I don't think I've ever met a proposal owner that has said to me, "Oh yeah, it's great. It's been a breeze. We never have to worry about whether we're going to get funding next month. It's just a walk in the park."
Yes, it's a Thunderdome, more like, huh?
Yeah, and we accept that as the diff. We accept that those are the rules. Those are the rules of the game, and that's what we have to work with. But how do you bridge that gap between that world and the business world, which we are hopefully trying to enter and build partnerships and business relationships with? And the best way to do that, we thought, was to build up a bit of a balance sheet, to get some equity on the books, get some real assets on the books, and then we're in an actual position to be taken seriously by potential investors and things, potential partners. If an opportunity comes along for $250,000 investment, and you don't have any money, that you're not going to get on. You're not going to get sent the term sheet. You're not going to get sent the pitch deck. They're just going to go, "I'm wasting my time here," because you cannot possibly enter into any form of negotiation with us. So that's the first reason why we decided to put a proposal in for funding and start building up a bit of a pot, because we do think that it will strengthen our hand when it comes to helping broker and negotiate deals on behalf of the network. And it's just so much easier to put a confirmation vote to the network and say, "Look, this is the opportunity. Would you like to go ahead with that, or would you like to give it a miss?" Instead of going, "Hey, this is the opportunity, but it's for $300,000. So can you fund this over 10 months?" It's just not going to work. And the reality is that we are going to need to look at investment opportunities that are of that scale. Otherwise, what's the point? Investing 10,000 here, 20,000 there, 30,000. Yeah, I'm not saying we can't do that on behalf of the network, but we're not going to get anywhere doing that. We need to think big. We need to think like Dash is at $500, at $1,000, and we need to start as we mean to go on.
So what was the reason behind the two different proposals? Because last month, the diff requested 9% of the Treasury. This cycle, I noticed 2. What were the reasons behind doing that? Yeah, we're learning as we go along, and we had some feedback. The feedback in general has been very good, but there's been a lot of constructive feedback as well, and we're learning. We're still trying to understand how to do all this and we're constantly trying to improve the way we do things. So the first funding proposal we put in, great, it passed, but 500 Dash is a hefty amount of Dash to take out of the Treasury, and we're just wary of getting criticism for pushing out potentially really valuable proposals and other Dash funded organizations, especially now the price of Dash has taken another leg down. So we had some feedback that maybe it's best to split the proposals, so that the DAO has the option to fund neither one or both. How we structured that was it's up to much debate.
we could split it 50-50 like we've done. We've done 250 each. One idea was to put one in for 500 Dash and one for 250, and see which one the network wanted to fund. But then there's the obvious risk that the network could fund both of them inadvertently. And don't get me wrong, great for the diff, great for us, but again, we're not here to try and upset the rest of the DAO and cause imbalances with the rest of the DFOs in the community. There's a lot of hardworking DFOs and a lot of hardworking funded proposals that need the money as well and deserve the money as well. So we don't want to be going in there dropping two proposals, one for 500 and one for 250, and then inadvertently ending up with 750 Dash and half the DAO DFOs being defunded. It's just, I'm not saying that would happen, and I trust that I do trust that the masternodes would not do that, but you just don't know. So and the other option, which we've just had some feedback on, was to maybe split it 350 to 150, or some other mix of the two. There's no right or wrong way of doing it, but we just thought we needed to do something this time around, to give the network the option, if it's a bit tight and if the budget, it really is quite tight, but something doesn't get defunded for the sake of having to make a binary call on the diff. It's clear, and I'm very pleased with the results of the last funding round that the network's shown confidence in what we're trying to do. That's great, but at the same stretch, we don't want to. What's the best word? We don't want to make it a binary call every month. You either fund us or don't fund us, and I'd rather it be. We would all rather it be something that, if it's lean, you can fund us 250. Yeah, it's not a problem. And all right, it slows down what we can do at the diff, but that's better than the alternative. So
something is better than nothing.
Yeah, and it goes back to the other thing that we wanted to kind of emphasize, the fact that it's got to be thought of as a bit of a savings account for the network. If the network doesn't want to burn the Dash, then the diff is probably the next best thing in reality. It's secure, it's under the control of the network. It sits there in Dash until the network decides what to do with it. So it is a bit of a savings account in that sense. So yeah,
I definitely remember. Obviously, hindsight is everything. Although there was no diff, so there's no hindsight. But I do distinctly remember the December 2017 budget cycle when it was the whole distribution was valued around 10 million.
Yeah,
and about under half of that was spent, even with a splashy Ben Swan proposal, which was, a lot of money, but it was still like just there's tons to give away. Yeah. And it's a lot of people would love to, take that and put it all into, say, just something else. At least just soak it all up, all the Dash, because then it would still be, a decent chunk of change if it wasn't spent in the meantime. And so it's kind of awkward in some ways because there's a lot of people. I'm sure there's a lot of sentiment of missed opportunity, of things too late kind of things. And it's always like, I think that the Dash ecosystem has grown as fast and as best as it can, especially considering the rest of the field. And a lot of people would say, well, what if during that big run up when Dash was top 3 coin market cap and just everything was going on, and then Bitcoin Cash didn't really exist, there was no, during that whole time, what if Evolution came out and we were all using usernames and all this other kind of stuff? And what if then we just would have won everything then and it's too late? Or what if we had the diff back in the day and we could have just, gotten equity and all this stuff that we've thrown money at over the years. Yeah. And it's like, oh, it's just too late. But I mean, if you look over long term of things, and I'm sure you have one of the longest term perspectives objectives of anyone in Dash.
Probably.
Ooh, up, down, up, down, up, down. There's going to be more things. And I mean, you can look at a project like Litecoin, which hasn't really changed fundamentally since the very beginning in its like better part of a decade of existence. And it's like, then there's plenty of opportunities that could have been capitalized on, but weren't. And so it's one of those things where, you know, we're trying our best to evolve even under difficult circumstances. But that's exactly what we kind of saw at the Dash convention, is even at what I professed at the time when they were discussing it, the worst possible time to hold a Dash convention, but turned out to be fantastic. And so that's one thing that Dash shines at is shining during those dark moments, or shining during inconvenient moments. And so, this is same thing when the diff proposal first dropped. I was looking at that, I'm like, oh, this is not a good time for this. But there's just, that's sometimes what happens. It's, you don't think it's a good time for it, but it turns out to be the only best time for it, you know? Yeah.
There's never a good time for some things, but going back to 2017, where we had that massive run up, and some people were going absolutely mental, going, why can't Ryan and Dashcore just kind of sell, take all of this funds and sell it and turn it into US dollars? And I was just saying to people, look, this money would be in Ryan's bank account, his personal bank account. There was no Dashcore group company. There was no banking facility set up. There was no corporate crypto exchange set up back then. It would have literally been us trusting Ryan with $10 or $20 million in his checking account. Well, not quite like that, but not far off.
But imagine the fleet of Lambos he could have bought, right?
and that was the harsh reality of it. Even if we wanted to do that, we couldn't, and that was frustrating. That was very frustrating, and that's what the diff is born out of. In all honesty, Ryan has spent the last 2 years trying to find a solution to that problem, because it really did. Imagine what we could have done with that kind of funding 2 years ago. We'd probably have a 5% stake in Kraken, for one, and if not more, and all sorts of other things that have been growing and developing the ecosystem. We could have already been 1 or 2, maybe even 3 steps ahead. And when you look at it like that, all right, we can look at it as an opportunity lost, but it's not, and it's an experience gained. We've seen the limitations of the Treasury system in all its glory during that 2017 run-up, and we're learning from that, and that is what the diff is. The diff is a solution to that problem, and if and when that happens again, which it inevitably will at some point, we are now ready and prepared to make hay while the sun shines, and to capitalize on that, for want of a better word. So it's an interesting point you raised. That's really what the diff is about. It's about not repeating the mistakes of the past.
Yeah, and that's definitely something that people got away from themselves a little bit with all the "we're going to own the world" kind of rhetoric back in the
Dash can afford this.
But that's the thing, is Dash could afford it, and it was like, even at this new low, it's still way higher than before. Dash still has quite the operation going at the bottoms. But if you think about, like, Dash had the power to just throw money at stuff, but not necessarily make that money stick.
Yeah.
And now the Dash money, first off, the experience is there to not just vote for random things, but also the money can be stickier now. Now you can actually get something from it. It's like, you don't just like burn it.
We have the levers in place now. We have the mechanisms and levers in place to actually to deal with these things, whereas we just didn't 2 years ago.
And I hope lessons get learned quicker than I'm anticipating. But what I'm anticipating is, now people have this shiny new tool. They're going to just try to funnel everything through the diff and try to get the diff to throw some money into just about every industry player. Oh, Kraken, 1%. Here you go. Oh, Uphold, you get this. Oh, let's throw some more at Coinbase so they never delist us. Let's do this and that. And then that's better than nothing because at least you have equity stake in all these, but then you'll find a lot of these assets will underperform or a lot of these startups will crash. Yeah. And then you're like, all right, well, first we threw money at nothing. Now we're throwing money and getting a piece of something, much of which is not really worth it.
Yeah.
Then you start to do, well, now we're going to properly manage investments and invest in good players that will probably win. And then you end up having a stake in someone. I mean, who cares about a stake in Bitcart, for example? Now you have a stake in something that works.
Yeah, well, and this is the thing, it's we're jumping these fences one by one, and we have a situation now where we are able to take equity positions and we're able to make investments, and that's wonderful. That's brilliant. I think that is truly revolutionary. But use that tool wisely. It's like anything, isn't it? Just because you can doesn't mean you should. So yeah, we're certainly not going to advocate to the network that we just go out and buy the first things that come up on the shopping list or the first things we see on the shelves. That's not what the diff is about. It needs to be more considered than that. It just needs to be professional. It needs to look at real investment opportunities. It's like any form of investment, especially in crypto as well. It is a bit of a crapshoot at the end of the day. It is a high risk play. It's a high risk industry, but anything we can do to mitigate some of those risks and just avoid the really obvious pitfalls and bear traps and all sorts of other nasties. You don't have to do a lot right to invest well. You just have to not do anything wrong.
Well, that does pose a very simple, interesting question. Yeah. So, what would be your dream investment opportunity for the Dash Investment Foundation?
Oh man, I honestly wouldn't know where to start with that. I think there are so many really clever and interesting solutions out there that we see evolving in the space, and yeah, I couldn't really put my finger in one and say, yeah, this is what we need to be doing. Nor do I think it's my job to either. It's I'm just here to pitch balls to the network, and it's up to the network whether it swings or not. If we just keep pitching balls, and the network decides whether to swing or not, and hopefully the network will only decide to swing when it thinks it can. It's a home run,
Okay, let's get clarity on that then. Let's get clarity on. So, just to recap from the Dash Convention Europe, you was part of the Dash Investment Foundation keynote, and one of the things that came out of that was that I believe you mentioned that any potential investment opportunity will always be first put to the network to vote on. It's your job to kind of field those investment opportunities first. To do your due diligence before presenting them to the networks. Is that correct?
Yeah, that's that's our aim. It's not the only way that this can be done. Like if a potential partner wants to just go straight to the network and do it all themselves, and then just make a direct commitment between it and the network to give us equity or promise us equity, then that's between the network and that particular operator. But there are caveats with that. The network cannot guarantee that the proposal owner is going to follow through on that, and they may abscond. They may just outright scam you and run away with the money. We've seen this all before. So what I'm trying to get at is that it would be sensible of the network to use the diff as a service as well as a savings account. We're not investment managers. We're not investment advisors. We've already said that we will hire people. The directors will hire these people in time when there are when there is an investment pot to manage. But at the moment, there just isn't any money. Investment managers need millions and millions of dollars to manage. Otherwise, it's just not worth the time. You might as well just stick it in an IRA, in a 401k type ETF or fund tracker. That's not investment. An investment manager cannot add value at that point. And in between that time where we kind of had that gap, it's our job as the supervisors to curate these things and pitch them to the network, and the network decides whether it wants to swing or not. Some things the network will want to go for, some things it won't. I don't know, but it'd be interesting to see what the network does decide to fund. I think that would be quite interesting. As for what sort of things it would fund, I genuinely don't have a clue. I'm kind of like, what do you think? What do you guys think? Or what would you like to see the DIF invest in?
So here's a just general strategic idea, not tactical, not case by case, but a strategic idea, which I'm not sure if I'm necessarily behind, but it does kind of speak to something that is worth considering. Everyone talks about always like the money behind, big money behind certain influences that might have something to do with certain companies doing certain decisions or certain publications showing certain biases, et cetera, because of their funding base. Mm-hmm. And there's a lot of hint going on there, but hey, I'll let everyone else connect the dots. Now, of course, what do you think of the general strategy of the DIF acting in a way of just trying to defensively acquire through equity influence in the industry, i.e., say you got this system where like the OGs, the old crypto people, just like, they heard the maximalist rhetoric, they whatever, Dash is low on their priority list, and they have to actually do a Coinbase and do deep research into Dash to be like, oh, this is actually pretty good tech. Here, we're going to add it and do all the special stuff. So rather than to even the playing field or even put Dash in a favorable spot, is that a strategy of do you think that might be a viable strategy of specifically going after larger industry players so you kind of own a stake in them, and therefore, although it's unsaid, right? It's not like you're literally buying influence, but because you're at the table, literally at the shareholders meeting, then they're like, oh, well, now that we just like them because they invest in us, they're part of us, they're one of our friends, we'll actually give them a fair shake. What do you think of that general strategy?
Yeah, I again, everything I say on this podcast is my personal opinion, so I'm not really speaking on behalf of the DIF here. But yeah, I think that is a legitimate tactic. I don't see any problem with that. That's how the world of business works. All right, I don't want that to come across contrived in any way, but it's the reality is that people do business with people, and if we invest in some what end up being quite large players in the crypto industry, then that cannot be bad for Dash's sphere of influence within the crypto sphere. It's got to be a good thing. It gets our name out there. It gets us access to influential companies and people within the space. So I don't see anything illegitimate about that. It's already happening. You just see it. You just see it on a private level where you have very stacked crypto whales who are doing exactly that, just in a private enterprise basis. Look at Digital Currency Group. It's massive, and it's probably owned by relatively few very wealthy people. But they own all sorts of, or they own stakes in all sorts of crypto related industry businesses, right the way from media to blockchain to payments to all the sorts of things that we've said we would look at as the DIF. So I don't think that it would be illegitimate for the diff to have a strategy that is not too dissimilar to something like Digital Currency Group, where we were to take strategic stakes in good businesses. Fundamentally,
Good business.
yeah, we don't want to buy into
Yeah.
stuff that clearly isn't going to work. But
Now the strategic difference between in that is, you have on the one hand an exciting startup that you think is going to do well. It's always a gamble. You think it's going to do well, and if it doesn't, whatever. If it does, you get massive gains out of that.
yeah,
And then you have an established company just as exciting, but you throw money into it, and it's just not. They're just only so far up it can go from there. You're not really buying too much of a growth, but but it's establishing. You know that will have influence already.
Yeah.
And then, of course, you can buy a much smaller stake. It's not like you throw 10% behind some or 20% behind some company.
Yeah.
You're throwing like 1% behind something that's already established.
Yeah.
I mean, which of those things is more preferable?
You've got to look at the opportunity itself. Price is what you pay and value is what you get. That's what I've always been told, and that's what I learned reading lots of books on economics and things. So you've got to look at the value proposition. What are you getting in return for your funding? You're getting equity, but are you also getting access to people, to industries, to partnerships, to other networks that we can then build out from further. It's that's the beauty of investing. It's not just about exchanging dollars for bits of equity. There's a lot more to it than that, and there's value that just does not show up on IRFS accounting, profit and loss statements, and balance sheets, and cash flow forecasts. Yeah, they're definitely important. You want to invest in businesses that have got a strong capital base. They have a proven model. They are revenue generating, and they are generating cash as well. You want to tick all those boxes, but once you've ticked all those boxes, you want to find investments that are a good strategic fit for Dash, and that can help in less tangible ways. That's what I'm trying to say. So yeah, it's all that's all kind of part of the diff strategy, hopefully, and that will influence what and how we pitch to the network for things, for sure.
Yeah. So as an example of like the strategic difference, one could throw money behind a company like Casa Hodl, which have had a brilliant idea to monetize Bitcoin fandom and what one could call lightning hopium, right? Just sell people something that allows them to participate in this otherwise kind of difficult and unrealistic scaling method, etc. But as far as advancing the strategic goals of Dash, it's kind of a dead end at that point. But on the other hand, some kind of a remittance system or some kind of a remittance platform, which I'm still waiting for someone to make some good Dash-based remittance system where someone can just plug in and get what they want, and it's all extremely simple and all packaged in one. And it's actually makes profit, because if it doesn't make profit, no one's going to work hard on it. Let's be honest.
Yeah.
And if it needs startup capital, just a little bit of it, you can get some of that sweet diff money. And then if it takes off, I mean, that's one thing I personally frustrated at, is just how few people use Dash for remittances, because it's just amazing. The application is just fantastic.
Totally agree. But one of the good things potentially, if for example we had maybe $5 or $10 million in the diff, that we could wave about, for want of a better word. Imagine if we could go to a larger scale remittance processor. Say they're a challenger within that space. They're not your Western Union or your WillPay or anything like that, but they're a challenger to those kind of organizations. But they're looking for they're looking for funding capital. They're looking to grow and expand. Something like the diff could could have talks with a company like that and start talking about, hey, we would like to invest in you guys, but look at this wonderful solution we have on the blockchain that you can integrate dead easy, and you can improve your profit margins massively. You can improve the quality of customer service, and you can, and we're going to give you the money to integrate all of this and finance your business. Now, and that is where you really start looking at potentially game-changing applications for Dash, because you have a private enterprise model that already has a viable business model that is cash generative, that can scale, and then you can turbocharge it, and that's one way of getting, again, it's influence, isn't it? Money and influence. We can go in and we can say, look, integrate our solution. We'll work with you. We'll provide all the capital to do this. We would like to take a stake in the business of maybe 10-20%, and bam, turbocharge business, challenger, take over the world, and straight away you're getting a real leg up into solving the remittances problem. And I'm just shooting from the hip here. So I'm not saying that's the sort of thing we absolutely need to do, but that's where we need to be looking. It's private enterprise, because that's where the real drive for crypto adoption is going to come from. We need it to be profitable for businesses to use cryptocurrency. We need it to be a competitive advantage for cryptocurrency, for these platforms to use cryptocurrency above and beyond what they're doing. And there are two ways of doing that. You can buy your way in through the diff, or you can just hope that one day they're going to stumble across us and go, hey, we can improve our margins by 4% if we use crypto.
Yeah. And that's the thing, is when people thinking about remittance, I think that what people have largely thought of in the crypto world is, just like sell them some Dash and tell them it works. Like, just something that's like very not thought through, or they do think through, and then they do think through it, but it's needlessly complicated and just whatever. Here's something I can imagine. For example, someone starts an enterprising. Someone gets their the proper money transmitter licenses in, say, the U.S. and Mexico, and they start up a little business. They uses an app that uses Dash platform usernames, right? That's the username used to log in, and then you send from your bank account, or there's an ATM that you just put money in and it goes to that username, and then you send it to, Granny or whoever, and then they can pull it out of the bank or to another kiosk. And it works like that. It's a very simple model, but it uses, on the one hand, it uses Dash as a payment rail, and on the other hand, it uses Dash usernames for that basic identity. And it could use it kind of as now you can just send, if you have some Dash, you get to, then you introduce to the next level. Oh, if you already have some Dash, then you can also just skip that first step, save some money and send directly to, and then you already got that username system set up. So you're using Dash as both the platform and the payment rail, and you're using the diff to jumpstart this possibly highly lucrative venture. Because I mean, if you just tell someone, like, look, I know you're going to send $100 home to your family today. What if you get to keep like an extra 10 to 15 of that?
Yeah.
And then they're going, well, whatever. But you get them to do it, and it works once, and they do it again, and then they're just like, now they're hooked. Now they keep doing it, and then they tell their friends about it. The word of mouth in like a lot of remittance heavy communities is huge, and then it just kind of spreads, and then you just, before you know it, you just have like giant volumes going through the network.
And this is the key point, Joel, about this, is that we are kidding ourselves if we think we can do this brick by brick, one customer at a time. You need to go to the head of the snake, as Mark would say. We need to go to established remittance providers that already have the network effect and the distribution channels and the relationships with the customers. And we need to go in either with money or without money and convince them that they can improve their margins and their bottom line by implementing a Dash-based solution. And once you get them sold on that, then they do all the hard work for you, because they can then go, oh, well, we're making even more profit now. Well, we can lower our prices, and that makes us more competitive. And that means we can start poaching customers off XYZ remittances down, in down the road. So it's just good business. It's sensible. That's how capitalism works. So the best way for us to get real adoption in remittances, I think, is to go down that route. And one way or another, that's how we should do it. We need to deal with existing remittances providers, because you got to give people skin in the game, because you got to remember, we are not a remittances platform. We are digital cash. You let the remittance providers, let the payment providers just keep doing what they're doing. Let them keep control of their supply chain. Let them keep control of their customer bases. Let them keep control of their distribution and networks, because that's what makes them have an actual business. And that's how they're incentivized to keep doing what they're doing. What we want to do is make sure that they do it on the Dash blockchain.
Yeah.
And it's how to solve that problem.
Now that's going to be interesting, because to a certain extent, if you think about the concept of a remittance, and I don't want to spend too much time around remittance, but it's an interesting subject to kind of go in there with. The concept of remittance is a remittance service, or remittance facilitator is a very, what we could call like a 20th century concept. As in, if everyone was using Dash to pay each other, there would be no such thing as remittances. It would just be you send money. It's like there would be no services. And so ultimately it's something that it would facilitate a business and then put them out of business over a long term. Yeah. And so I'm sure that's going to be the interesting strategic thing to conquer, is in, are you going to invest? Is a company you invest in, are they going to end up, crashing and burning once it becomes too successful? Because before you know it, you realize you just do this thing and then it works. Yeah. And then the other.
This is why you have to give these businesses an out. You have to give them. You can't kill the goose that lays the golden eggs. They have a valuable business. They have a valuable customer base. They have lots of business going on. We want them to do that business on the Dash blockchain. Think about it like the cell phone networks, the mobile phone networks in the 90s and the 2000s. They made their revenue from SMS messaging and phone calls. That was their revenue model, to the point where you'd pay per message. It's just and to think about that these days, it's just crazy, isn't it? Fast forward a decade or so, and data comes along, and these platforms like WhatsApp and Facebook and all these other things, they just blow their business model out of the water. Like, nobody sends text messages anymore unless they don't have any data. And even then, they're just completely free. There's just they don't bother charging for it anymore. And likewise, phone calls, people use WhatsApp and Facebook calls, Skype, anything else. People don't tend to make phone calls like they used to do through the traditional cell phone networks. But what's happened? You haven't seen the cell phone company die. Their business model has changed, and it's gone, okay, well, we don't sell text messages and phone calls anymore. We sell you a data package for $25 a month or $30 a month or something, and you can do what the hell you like on it. It's a toll bridge. They get to keep their infrastructure. They get to keep their valuable client base. They get to keep their revenue streams coming in. But at the same time, whole ecosystems like Facebook and Dash have grown up within that bubble. So, and I don't think it's going to be any different in the payment space as the payment space evolves and has to embrace cryptocurrencies eventually.
And that's also going to be interesting, because when we talk about evolutionary usernames and things like that, it's going to be so easy, your grandmother can use it. Depends on the grandmother, to be honest, because just the username password type, like this, the app idea, a lot of people are just not technical at all. They don't want to do that. And so whereas an enlightened person like me, whatever, if I could figure out how to get a username and how to just send to my funds to my parents
Yeah.
through that, and I could probably get them to figure out how to register a Dash username and also receive it. Maybe I could do that, but there's a lot of people who can't. And so what if your business, you don't have to really set up much infrastructure because it's all already set up on the Dash blockchain. Granny Sanchez or whatever walks up to your little kiosk and just says, I want to send $50 to my, grandson. And then you register her username that you control, by the way, right? And this is like going to make a lot of like Dash hardcores like melt, like Wicked Witch to the West of like custodial. You're running someone else's username, but just for their own internal accounting, they don't have to build up. They don't have to pay anyone for this service. They pay micro fees in Dash to register and use usernames for all their customers, and then they just say you send, and then it just works out on both ends of it. And then their whole infrastructure, they're like a shell around like a Dash ecosystem. And then it's kind of a closed box, and then they have I'm sure very little expense on anything because Dash is running it all. Dash is running their entire backend infrastructure. They only have to create they only have to have like that physical location where you can go up to someone and handle cash and all that, and then that's it. They have the knowledge, they have the expertise and the knowledge, and that's what you're paying for. That could be a highly lucrative model. Now, here's the thing about that. And we'll go back to the diff idea. Is a diff better off investing in a startup that wants to do that kind of a thing, that just says, look, I have this awesome idea of how I can make money. I can upset the whole remittance industry, but still make money over long term by doing it this way? And will you give me some groundwork to just like get the transmitter licenses or get the initial startup costs figured out? Or is it worth trying to pay, say, Western Union, get an investment stake in them? Well, I mean, Ripple's already been there, but let's just take another one. And then just hope that they adopt a Dash kind of a model. Like, how much of it is investing in the old that works today, and how much of it investing in what could be the power players of the future, but might not necessarily be?
My view on that is we need to go to the existing providers, not necessarily the biggest, but the challengers. Look for the ones that are innovating in the space already and that are trying to take Western Union's lunch. We need to speak to those guys, and we need to demonstrate to them the value of the blockchain and how it could transform their business model. And that is the way to go. I'm not saying we shouldn't embrace startups, and we shouldn't foster that kind of ecosystem where, give it a go, have a go. But the reality of the situation is that the remittance industry in general and the payments industry in general, it is very, very well entrenched and established. You're not going up against you change, you probably change your bank or your financial providers. You probably change them about the same amount of times in your life as you would your dentist or your hairdresser. Do you know what I mean? People are creatures of habit. They kind of they don't care that it's not the cheapest thing to do. They just quite like things the way they are. So the best way to overcome that is to integrate in the back end with the existing providers. Let them keep having their piece of the pie. Let them keep their profit margins, probably increase their profit margins, and build out a channel. I've been in the IT channel for a long time now, and what I mean by the channel is you have the big software houses like Microsoft and Google and Cisco, and then you have the hardware manufacturers like Dell and HP and Fujitsu, and then you have you have software as a service platforms. So you have like Sage for accounting and QuickBooks and a few other things. These are all like at the top of the channel. And then you have the channel, like channel partners, like my business is in that industry, and we have the relationship with the customers and the clients. We add the value that way, but we know and understand the products and the services that we're selling from Microsoft, from Cisco, from Salesforce or Sage or whatever other provider. We get commission from them for providing those solutions, and we get paid from the customer and client for integrating and doing all that hard work. Microsoft are happy because they get the money, they get the royalties for their software. I'm happy because my business is making a living and making a decent profit, and my customers happy because they don't have to get on the phone to Microsoft every time the paperclip pops up and says something. It's like
Windows. Oh yeah, that's old school reference.
That's a retro reference.
So I've got to say, I was a bit triggered when you mentioned the hairdresser. But I want to bring it back to the diff because we've got loads of important questions from
we
the
could
community.
talk about this all night.
And the community comes first. As we always say, the network decides. And I've been keeping a close eye on the live chat. And one of the things that's come up is our good friend Halawe has mentioned that let's bring up the idea of putting up a proposal to masternode owners to decide if the proposal fees should go to the diff. Would the diff propose something like that? So for those that are listening, watching, unaware, to submit a proposal to the Dash Treasury, it costs 5 Dash, and that 5 Dash then gets taken out of circulation. So the proposal is to use the 5 Dash for each proposal submitted, for each proposal to then be allocated to the diff. Michael, what do you think about that? Is that a good idea? Because this would be a protocol change thing. So this is only recently being proposed. So.
Mm-hmm. Yeah, I first heard it muted in the conference whilst I was over in the conference, and again that Q&A session was fantastic. The AMA, it's really nice to get a lot of good questions and feedback and things from valuable members of the community. And one of the questions posed was exactly that. I don't have the answer. I don't know. I think. My personal hunch, my personal opinion, this isn't the opinion of the diff, is that it sounds quite neat in theory, but I think it could. Yeah, I'm not sure I'm entirely comfortable with it being hard coded into the protocol. It's a bit arbitrary for my liking, but. It's well-meaning. I get why it's because you think about it. If there's 20 proposals in a month, that's well over 100 Dash, maybe 150 Dash burned every month. That could be going to the diff. It makes sense when you think about it like that. There's not a lot of reasons not to think that that's a good idea, apart from the technicality of the fact that it's a hard fork. It'd effectively be a protocol change. All the master nodes would have to update to make that happen. And then if there was a problem with the diff for any reason, or if we got shut down, or if there was a legal issue, or if there was, it's highly unlikely, but if ever there was a problem with the diff and the relationship with the network, then it's hard for the network to unwind that. It's going to take another protocol change. And what I'm getting at is that, it sounds good in theory, but how you would put that into practice and how that mechanism would work, I don't know. It probably needs somebody from core to chime in with the technicals on that to see whether it's something that could be done in a decentralized way.
Yeah. I mean, it would be good to just return each 5 Dash burned into the pool of available Dash, so that therefore every time, because for example, it's an anti-spam feature.
This is it. That could work as well. Yeah.
Yes, it's an anti-spam feature as it is, and so far as it's saved a lot of people from a lot of dumb things from going up before the whole network. But most recently, not entirely, right? People have been paying. People are finding that about $300 or whatever it's worth now is like a small price to pay for months of trolling. Some people
for 5 minutes of fame.
Yeah, or 5 days of fame. Who knows how many? What the price per fame for attention unit is measured. But now imagine if the more you try to troll the Dash network, the stronger it grows. So if you put in like 5 troll proposals, that's like another 25 Dash proposal that could be funded, or a little bit of extra. That would be something interesting. I believe it was Ash who mention that in the comments. Hi, Ash.
Yeah. Let's move on to some trust protector stuff because, well, I think we've got to get some. I mean, the diff is exciting because it has like unlimited potential.
Yeah.
But as a trust protector, you are the first trust protector we've had on the podcast, excluding myself. So I've got to ask you some questions. So, firstly, do you think the Dash community is utilizing the Dash trust protectors to full effect?
No.
No?
Probably not. I think again, it's new, and it's something that I think there's a lack of or there's misinformation maybe, or there's a lack of understanding of exactly what the trust protectors are there to do and how it's actually structured. And I won't go as far as to say that some of these governance proposals in inverted commas are just trolling and things like that. I think some of it is just a genuine misunderstanding of how these things work, how they're actually structured, and that's kind of what I was getting at in my replies to some of these proposals. They aren't governance proposals because they cannot be enforced or enacted.
Well, let's tackle the issue on the head here. Let's not skip around the bush. Let's just say it like it is. So for those listening that are unaware, there have been recent proposals targeting to remove individuals from Dash Core Group. So Michael's trying to explain right now how he views this from a Dash Trust Protector position and saying the network essentially isn't really going about it the right way or doesn't understand the trust protectors in their mechanisms and what they can do. Yeah. Is that correct?
Yeah, and that's why I answered no to your question. Is the network making the best use out of the trust protectors? Because these proposals have demonstrated that evidently not. Because I think what people need to understand, if they don't already, is that the trust protectors are effectively the board of directors, are effectively the shareholders of Dash Core Group, and a shareholder only entitles you to two things. It entitles you to a share of any profits, and it entitles you to have influence who is on the board of directors of that company. Those are the only two things that we have influence over as trust protectors on behalf of the network. So the first one is irrelevant because it's a non-for-profit anyway, really. Although it is a C-class corporation, so it is a for-profit corporation, but it's not
for-profit. It's a for-profit,
but it's
corporation that's terrible at making profit.
That's not really going to make any profit. So we'll scratch that bit off. And the only other thing that we are there to do as trust protectors, therefore, is to hold the board of directors to account, and to hire and fire them if the network instructs us to. So the point I'm getting at is that if a governance proposal was put in to question whether we should fire a particular board member of Dash Core Group, then that and it was for a five dash fee, that would be a legitimate governance proposal. Doesn't matter who submits it, that would be legitimate, and that is something that the trust protectors could act on and do deal with the wishes of the community. Putting in a proposal asking for an individual employee to be fired from Dash Core Group, or asking for an individual moderator to be removed from some privately owned subreddit that is owned by Evan personally, they're just things that we have no jurisdiction over. We have no power and control as trust protectors to enact. So the point I'm getting at is that it becomes frustrating as a trust protector, because we're here to help, we're here to listen to the network and do what the network wants us to do. But if you're going to put governance proposals in, make sure you ask the right bloody question. Yeah. I think that's
if I request to you that you go after Moo Cow Moo and make him answer my emails, you can't do that for me?
Not really.
No? Oh.
I can ask him as a friend. I can say, look, Mukau,
Yeah.
we've known each other for a long time. Can
That's
you
the funny
just
thing.
do me a favor here? But
we're in this
we have no
we're in
truth,
this whole
yeah.
yes, we're in this whole decentralized world, which is the open participation idea, which even restricting the master nodes is very open participation, because anyone can get one.
Yeah.
Anyone can end up with one. Anyone, like, you got the floodgates, and just as part of that, there's like a lot of, I mean, I don't know how many investors I have not been on a corporate board before, right? I've not witnessed very much of that. And I don't know how many investors or, how many shareholders at shareholders meetings go do the kind of crazy stuff you see going on in the master community. I don't know if you see also like that lower level of education. I don't know if you see, or I would say, like, it sounds like a diss. I would say like a lower level of understanding before speaking on some of these things. For example, trying to say, hey, Mr. Lewis, why don't you go fire some random person on the Dash Core Group payroll? Isn't that this within your rights, right? Can't you do that? And then you're just like, yeah, you didn't look into you don't look into your investment enough. You don't know what I can and can't do.
Yeah. And that's
it doesn't really happen, does it? Outside of Dash.
No, and maybe there needs to be some education and understanding as to what exactly trust protectors are there to do. We are there to actually ask hard questions of DCG, and we do. We during our meetings with the board, we will pose questions that the community put forward, that we hear stuff that we hear the community complaining about, or if they have an issue or they don't particularly like the way something has been handled by Dash Core Group, we will raise that, and we will ask Ryan and or whichever director's remit it falls under to explain themselves. And it's a dialogue at the end of the day. If Ryan comes to us and says, yeah, we could have handled that a little bit better, and then that achieves a lot more than some bloody silly flawed governance proposal that asks the network to do something that can't be done anyway.
Okay, that's an important question then. I think because we've got to think, because as a fellow trust protector, I feel that we could be doing more, and I think the community could be engaging with us a lot more. But while we've got this opportunity, I want to know, and I think the community will want to know, as a trust protector, are you happy with the development roadmap of Dash Core Group and overall health and direction of Dash as a network?
Yes is the answer. To elaborate on that, I had a good chance at the Dash convention to speak to some Dash Core Group members and employees and software devs as well. So I've seen firsthand that the morale is really good. They feel like they're really making headway with the development roadmap, and they're trying to do something that has never been done before. We have to remember that. And software development isn't easy, and what we're trying to do isn't easy. Deadlines slip and targets get missed a little bit, and it's been a bumpy road. But my view is that things are solidly on track. We are innovating. The releases we've done this year with chain locks, with the chained instance send, with LLM queues, all these other innovations. Nobody else is developing or pushing out as much as we are. I don't think in the way that we're doing it, and with the consistency we're doing it. We're not rolling things out and then seeing carnage on the network and having to roll it all back and start again. It's being done very methodically, very systematically, and the results are showing. Of course I'd want evolution done and dusted by now. We all do. But But the reality is, it's going to be done when it's done. And I think, I think if it's on testnet by the end of the year, I think we should take that. Because Evo is just one part. Once Evo is done, once the nuts and bolts of Evo is done, we then have to move focus onto the dApps, and we have to look at the next stages of development. And there's so much cool and interesting stuff, just not even on the roadmap yet, because we haven't got the funds to do it, and we haven't got and there's no point doing it until Evo's out the box. So yeah, in answer to your question, yes, absolutely, I'm really bullish. I think, I'm going to say that obviously, but I do genuinely still believe in the project. I genuinely believe that we will deliver Evo, and I genuinely believe that it's going to continue on that trajectory. We're going to keep developing. We're going to keep pushing out innovative new solutions, and post Evo, it's going to be. There's going to be a whole new set of problems to solve. The Dash DNS is just like mind-blowing what can be done with that. People haven't yet let that sunk in. Just that one innovation, a DNS on the Dash platform. That is something really, really cool. Which again, I could spend the whole 2 hours talking about. So we're going to have to move on.
I was going to say, Michael, don't ruin next week's podcast, because we're going to have Dana and Anton on to do a deep dive into the Dash platform. And if you are in the community, I'll be reaching out earlier in the week to get some questions for the community specifically for that in relation to the keynote that they did. Okay, well, so you're happy with the direction of Dash. Let me mix it up a little bit. Let me rephrase it in a different way. As a long-time member of the Dash community, you have witnessed Dash move up and down the rankings and CoinMarketCap.
Mm-hmm.
What do you personally feel is needed for Dash to get back in the top 10?
It's a difficult one. I don't think we've done anything intrinsically wrong. I don't think we've gone down the wrong route in terms of development or anything like that. I think a lot of the, if you strip out the non-minables, you strip out all the cryptocurrencies that are clearly securities or ICO tokens or some other
exchange tokens,
or exchange tokens, you strip all that out,
or fiat currency,
or just straight up fiat. Tether is the third biggest crypto.
The US dollar is number 4, is top 4 crypto. I don't know where it is today.
So when you strip out all of that, and I know it's easy to go, well, if we don't count this and we don't count that, then we're number 1. But I'm not trying to play that game. But if you strip out the non-minables, then we're still in the top 10 in terms of mineable cryptos. We are still considered one of the original and authentic altcoins. We were one of the first in that supernova, that big bang in the beginning of 2014, where all these. 2013, 2014, late 2013. So we have that authenticity now. We've been around, and half the key to this is survival. It's not just about thriving; it's about surviving. And the fact that we are still here, we're still in the top 10 of mineable coins, because that's all we had originally were mineable coins. That's what a cryptocurrency was originally, So we're still top 10 of the mineable coins. I think that we are in a great place. The Coinbase integration is it's better late than never, but it's vindication that we are, for want of a better word, at the top table of crypto. We are a serious crypto project. There's no getting away from that. In answer to your question, what I think it's going to take for us to get back up there, I think the market responds to investment dollars at the moment. So the reality of the situation is that I don't believe any amount of on the ground merchant adoption and kind of grassroots sort of stuff is really going to move the needle in terms of the market cap of Dash. That's probably quite a controversial view, and there'll be people spitting their coffees out on their desks when they hear a trust protector saying that kind of thing. But you know, we've got to be realistic. What moves the needle is big investment dollars moving in and out of the space, and the next crypto boom will be no different. We're going to see if $10 or $20 million turns up tomorrow to buy some Dash. You're going to see the price move in a spectacular way. That's just the reality. The market would move 10%, 20% easy, no problem. And that's just $20 million. You know, in the scheme of things, that's not a lot of money in the world. So you've got to look at these things in context. So what I'm trying to say is that what is it going to take to see Dash back in the top 10 and things like that? It's going to take the next bull market and investment dollars and making sure that we are seen as a credible portfolio coin. Yeah, you know, you're going to have big money coming into this space in the next bull market, and investment advisors, you want them saying, yeah, buy a bit of Bitcoin, buy a bit of this, better buy a bit of that, and buy a bit of Dash. That's
now,
what.
how do we get there?
Well, that's the $1 million question, isn't it? How do we get there?
Well, the 20 million plus dollar question.
The 20
million
million
you just
question,
said, but
yeah.
sure.
I think being, you know, just getting onto these big trading platforms like Coinbase Pro, Coinbase, that has helped in itself. It's all about legitimacy. It's about liquidity as well. You know, that I remember at the Dash conference seeing a wonderful presentation by Demelza Hayes. She did an excellent presentation, and she showed us transaction counts for different cryptocurrencies, and she showed us active wallet addresses for different selection of cryptocurrencies, and we were hands down pissing all over the other cryptocurrencies. We had far more active wallets and far more transactions than our nearest competitors in terms of market cap. So we were acing it in that respect, and that's because of all the hard work done with grassroots and merchant adoption and all these other things, and that's great. And then she flipped over to another set of data that showed that showed the economic activity and the volumes and the flows and the actual the money going through different cryptocurrencies, and things like Litecoin were just, they have a larger market cap because more investment dollars are flowing through them. It's as simple as that. You know, and we cannot escape that reality. You know, merchant adoption is great, and transactions are great, and active wallets are great, but nothing will move the price like good old hundreds of millions of dollars flowing through the ecosystem. How do you get that? We have to start looking at what Litecoin and what Bitcoin Cash and what all these other cryptos are doing to attract that, you know, and get some of that ourselves. Why aren't we getting those same flows? I don't have the answer to that. There are, you know, I could speculate that maybe the private send thing puts some investors off and puts portfolio managers off. Maybe the big players, you know, the big investment funds like pension funds and stuff like that, they'll only invest in Bitcoin and maybe Litecoin and Bitcoin Cash because they're safe. You know, we want Dash to be on that safe list, and Ryan is doing a sterling job. He's working really hard. The whole team at DCG are working hard. They've created this paper to show that regulatory wise, we are no different to Bitcoin, and we should be treated legally the same. And that is working. It's got us onto Coinbase almost certainly. It's stopping us from getting delisting, hopefully, from a couple of other exchanges. It is cementing our place on a lot of cryptocurrency exchanges, and it's just going to take time to get that message out that Dash is open for business, and you can buy Dash without getting in trouble with the law.
Yeah, I'm sure that's a big that's a big element. And as far as like the safety thing, we have to realize first off that Bitcoin almost 11 years old. What, Litecoin almost 8 or around there.
Mhm.
So obviously those are two that they're safe because they just have not, Bitcoin is still survived and Litecoin has just not died yet.
Yeah.
So yeah, we're there.
It's
and
clearly being used though. The numbers don't lie.
Yes, it's probably a chicken or the egg thing, it's just
Yeah.
because it's there, it's safe, it's old,
Yeah.
therefore.
Yeah.
And then you got, say, Ethereum, which might be newer, but it just got this massive amount of developer interest and just tons of activity. So then it's kind of cemented there for a while. So you got like a few big ones that are just sort of in that group. Then you have like the next class, the 5-year-olds, right? The toddlers. You get like, for example, Dash and Monero and things like that are still, and I don't know how many of the other 5-year-old coins are still hanging in there. I mean, very few.
A lot of them died an ugly death. Bitcoin, there's all sorts. Yeah.
Yeah. So they're all
Siacoin. I could reel off a dozen or so that just aren't around, or if they are, they're just dead projects.
I don't remember how old Dogecoin is either. It's probably a little bit older, but that's kind of on a slide. And so eventually it's just like the survivorship bias type thing of like, wow, eventually you're still there. Then that's what gets people to look at you. And when they look at you, you're like, oh, you got things going on and you guys don't. Oh, that's done. I think it will be interesting. And obviously we can't prattle on forever about this sort of thing, but it would be interesting. I think that once you're in the group, you're in the group. You want to be in the club. And once
I think we're there.
Yes, you might be in the club. I think we're kind of like, we're talking to the bouncer. We're not at the captain's
table.
Yeah, we're talking to the bouncer. Table. We're waiting to be included. We're not in, but we're kind of in. Now, once you're in the club, one thing I noticed, which was, first off, Bitcoin is still probably the most used cryptocurrency. If you talk about just transactions and volume and use.
Yeah.
Ethereum has more, of course, more transactions. There's a few that don't have more transactions, but as far as like all that, and then you see the demand. I mean, it's like simple economics, right? The demand, i.e. transactions, go up, 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 up. And when they hit that hard ceiling, I thought they hit the hard ceiling in like late 2016, but it wasn't until a year later it really hit that ceiling. And all of a sudden you saw the fees just go straight as it hit here because that demand still was there. And then Litecoin had a 10-fold increase in transaction volume like the next day because it spilled over into people dump into the next one. And then Litecoin started crashing.
The waterfall effect.
Well, yeah, it fell from Bitcoin it tried to fall to Ethereum, but they're too busy with cats and such to be able to processing transactions. And so then it went to Litecoin. And so there's a lot more consumer demand than just 2017. There's a lot of it more of it out there eventually. And so if you have Dash in there, it just waterfalls and then it hits, and then because they all fail, and then you hit Dash. And then, it stays and they stick with it. Maybe some of it bleeds off. People are like, oh, Bitcoin works again. I'm going to start using that. Whatever. Maybe. You have some of that. But I also think that one of those big, like the scaling problem, I think that investor hype in Bitcoin there's been a lot of backed and Lightning. Back turned out to be a little bit of a nothing burger, although it's too early to call that as over yet. And Lightning, I think, is going to have a collapse. Like, I think it's still being developed. It's still kind of working, but mostly not. There's still people, but now you have OGs who are starting to complain about it. And it's like, unless they come up with a new ruse, and at that point, a lot of people are throwing money in Bitcoin because it's going to scale eventually. And then as soon as Lightning, the idea of Lightning collapses. It's not that, Lightning is kind of Lightning's processing like under 10% of Dash's whole transaction volume today. It's just doing nothing. And so when you have that psychological Lightning collapse where investors don't think that that's going to be ever going to work anymore, boom, they're going to throw down the waterfall, and you just got to be in that club. And then, then that's how it works. I don't know. Do you think I'm wrong on that?
No, I think it's a very good observation. That's kind of how it works. And as I said at the beginning of this conversation, we are there or thereabouts. I know it sounds like a defeatist thing to say, but the fact that we've survived the bear market, the fact that we're still a substantial cryptocurrency in this space. Our market cap even today is 600 million or so, maybe even higher. We have a strong, robust network. We have all this development going on. We have this wonderful ecosystem that just continues to grow and blossom and develop. And we've got the best community in crypto, I think. And again, I'm biased about that. But...
Yeah, and let me just interject on that part, the convention. I mean, I was honestly I'm always a Dash permabull, whatever you call it, but I still was like, oh man, what if there was still 30% of me, and maybe I'm too much of a skeptic and a jerk, but it was 30% of me was like, what if there's 47 people that show up to the convention and it's just it's all right, but it's just it just kind of looks like it's yeah, well, this is where we are in the cycle, but no, it was 6 weeks notice, probably topped 100 people, if not more. I mean, it was just tons of people and a bunch of outside companies, just I was just wow. I was
well over 100.
Now,
150.
How many people came to the Ethereum Classic conference? I don't know. How many people, I mean, at some point I do agree that there's a lot of people. It's the herd effect. People go to all these Bitcoin conferences and they're still maintaining, but then it's hey, look at all those people over there. And it's not even a ton of people, but it's a group. And then you start poking your head over there. And then before you know it, people are all those people are into Dash, so I should be too. And that's as far as the research goes.
Exactly, yeah.
But it could work like that.
And this is kind of what I'm getting at, is that, we're at the bottom of a bear market. Almost certainly. We're kind of there or thereabouts. I don't know for sure. Anything can happen. This is crypto, but I'm pretty sure we're at the bottom of a multi-year cycle, and we're still there. We're still, we're still a large cap. I still consider as a large cap cryptocurrency, compared to the ecosystem as a whole. We've got a lot of stuff going on. We've got active development. We pay our developers. We've got self-funding, self-governing network. We're putting all the right pieces in. We're putting all the right pieces of the jigsaw together to build for the future.
We don't have foundation missing balance sheets cropping up still after our founder said there's no one wants to develop on the coin and any of that stuff. We're not having any of that stuff. So
we got through all of this and we're still here after what has been a brutal bear market by any standards. It's so I think that there's a lot to be bullish about, because I think if crypto in general didn't believe in Dash, we wouldn't be where we are now in terms of market cap. Without a doubt. You only have to look at some copy coins and some other masternode coins that have just gone completely to the wayside. They're just fallen apart. And that is not to be underestimated, because it can happen so easily to any project. And the fact it hasn't with Dash just shows the strength and the determination of the network and the community and everybody who is working on making Dash digital cash. We're doing it through a bear market, and there will be better times. There will be good times when this crypto winter is finally over. We're in really, really good shape compared to almost every other cryptocurrency out there.
The moon will come out tomorrow.
I do have,
and that's why I'm super bullish on it.
I do have one question for you. So I think we should do one or two more questions, and we should think to wrap this up. No. So I've got my final question for you is. Thank you for being so candid and saying, what you personally really believe in, and distinguishing that fact as well.
Yeah, and there'll be things.
A lot of it's your personal opinion, not representative of the whole diff. But you did say something slightly controversial, and it would be wrong of me not to pick up on it and discuss it. So, in 2018, the Dash network and Treasury really focused on pushing merchant adoption. I've also noticed a change in sentiment in the network towards merchant adoption initiatives. But what I want to know is, why do you think this is?
I don't know. I think it's like anything. We're trying to find out what works, what what is going to get Dash to where it needs to be digital cash for everybody. And I think that merchant adoption is a legitimate way of doing that. I think it makes sense when you think about it. But I think what the network is struggling to square is the fact that it's clearly not having an effect on the market cap, and that is where it starts getting sticky, because it's all well and good funding things that that we think are going to grow the network and benefit the network, and it's going to really kind of get Dash out there, and nobody can dispute that. Nobody can dispute the hard work that has gone on and all the various adoption proposals that we've had over the last 2 or 3 years. The evidence is there to see that that it has made a real difference in terms of growing the community and all the intangible stuff. But I think where the network is struggling, this is just my opinion, and I'm just trying to understand where the masternodes might be coming from, is that they're not seeing that reflected in the market cap and the overall well-being of the financial well-being of the network. But is that misplaced? I don't know. Should the masternodes be taking their cue from what is a bear market that is far bigger than anything that merchant adoption can do? It's like it's like blaming, it's like blaming gravity on the moon. It's the the moon does exert some gravity on the planet Earth. It causes the tides, but it's not the reason that the sun's the bloody cause of gravity.
Yeah,
the major cause of gravity, and maybe we are missing the bigger picture there in some respects, and maybe there is some disconnect there. But I'm not saying that merchant adoption isn't working. I'm just saying that it's not generating the value that the masternodes may be expecting at this stage.
Yeah.
They're not seeing the transaction counts that maybe they wanted. 20,000 transactions a day on the network is good. It's okay. But I think the masternodes question whether it would be materially different if we didn't. How much of that is true merchant adoption that is causing that? I don't know. And I think the masternodes are trying to get their head around just how valuable and how worthwhile it is to keep funding these things. Can it scale? Is it economically viable to do this over many years and in such an intensive way at such great cost?
Now it brings me to the concept of balance. We're trying to maintain that perfect balance, and balance is not a single pillar kind of a thing. You maintain balance by having equal canceling out forces, pulling or pushing on all sides. And unfortunately, as I mentioned before, I was talking about like how people will end up using the diff. It seems like the Dash ecosystem, the Dash zeitgeist, as it were, because it's tons of people. It's not one idea, it's not a few brains, it's not one group. It's just the general feeling learns one big lesson at a time. And so first off, it's like, well, we're just going to develop, and then we're going to hold meetups. It's like we're going to hold just kind of get physical locations where you get new people to download wallets. It's like, was that a wrong lesson? Absolutely not. But was it the answer to everything? Absolutely not. So they learn that lesson. Then they're like, well, now we do new big marketing things. So then you start putting logos on jet planes and all kinds of stuff. And it's like, is that wrong? Not necessarily, but is that going to take you there? No.
Has it added any value?
Yeah. Then you go, well, or more importantly, did it add enough value to justify its cost? No, possibly not. And then you go to, well, why don't we get actual places to spend it? So then you can, that's a fantastic idea, of course. People go there. Is it everything? No. Is it also like worth nothing? Well, no. And it's like, well, you learned we got to do that. Okay, so we got meetups, setting people up with wallets. We got places you can spend it on. We got some kind of like advertising, marketing, whatever, brand awareness out there in the world. All right, that's good. And it's like, well, now we need to generate consumers. All right. Then once all those are together, you remove one of these pegs, and then you become imbalanced, and usage falls flat on its face. But it's like, I don't think the network is going to get the secret to mass adoption next time around. I think they'll get another peg in that balance, another part of that balance. And merchant adoption is one of those things so for example, there's a few merchants here locally, and they're all pretty well used. Mm-hmm. And we're working on getting some more here in New Hampshire, which is great. And they're pretty well used. It's still a minority payment method, let's be honest, but it's being used. It's being actually used because there's demand for it, right? Yeah. You get a bunch of merchants, people want to spend it, and then that's kind of good. Now, if we spent, say, millions of dollars or however much it took getting a massive merchant adoption campaign here in New Hampshire tomorrow, where every business took it, that'd be fantastic in a lot of ways. But let's be honest, most of them would not receive transactions because demand isn't quite there for that yet. Yeah. So merchant adoption is great, but it can't exceed demand. It can't greatly exceed demand, at least, or at least that's the misallocation of resources, in my personal opinion.
And it's business at the end of the day. That unless it has no technical cost whatsoever or financial cost to the merchant, they have no incentive to accept it. And this is something that we need to look at, and something that has been looked at, and it's being addressed by some DFOs. They're looking at integrating with payment processors at the source. Get a Dash module built onto the software stack of existing POS solution providers that already do Visa, MasterCard, Apple Pay, Samsung Pay, you name it, all these other things. Just have Dash built in, and it's seamless. Then the merchant can then accept it without even having to have any technical overhead. They don't need training on it. They don't need to be shown how to run two bookkeeping systems or run two separate cash registers, for want of a better word. They don't have to muck around with all it. Just make it so that the merchant doesn't even know they've integrated, because that's what they did with Apple Pay and Samsung Pay. Shops didn't even know that they'd accepted it. You go in and say, "Oh, do you take Apple Pay?" Well, I don't know.
And actually, I've experienced
and then
that
you
exact
look at it
same
and you
thing.
And it's just there anyway.
I've been to merchants where they say, I've been to merchants and said, I want to pay with Dash. And I'm like, okay, great. And so I pay with Dash. And then the person behind me says, I want to pay with Apple Pay. They're like, I don't know. Well, do we do that? I don't know how to do that. It's because, got onboarded like that. But,
because it's just built into the kit. It's already there. But the only way you're going to get that done and get it done over with mass adoption is by working with the payment processors. You've got to let them keep their slice of the pie. I think you've got to let them keep their relationship with the customer, with the merchant. You've got to let them keep their relationship and the revenue stream. You've got to let them keep making their commissions, because they're earning those commissions. If Dash was pushed out to 100,000 POS terminals natively and could be accepted, then it is completely legitimate for that POS provider to make 1 or 2% on those on each transaction. Do you know why? Because they are running the infrastructure. That costs money. They are running a business at the end of the day, and they are doing all the hard work. Then they are dealing with any issues. If the merchant phones up, has got a problem with the terminal, they don't phone somebody at Dash to get it sorted. They just phone up the payment, the terminal provider, and say, hey, this shitty thing isn't accepting Dash all of a sudden, or isn't doing Apple Pay, and then their engineer, their support team sort it out and deal with it all. That's what the 1 or 2% fees for. And I think that's completely legitimate. But that is the way I feel that we need to start exploring with mass adoption, is to get into these bigger payment processes, get integrations at that level, and let them keep their slice of the pie. I know we are disruptive, and I know that we are there to kind of reduce friction and reduce costs of handling money and transmitting money, but we can't just go it all in at kind of like we're gonna destroy the whole system and make it completely unprofitable for anybody to use Visa or MasterCard ever again. It's just not going to happen. You're going to have to work with the payment solutions providers, because they're the gatekeepers, they're the toll bridge. They are the people who own the networks and the distribution channels, and that is how you get mass adoption with cryptocurrency. You get the payment processors on side.
Yeah,
that's my view.
Now this is a 10 to 20 year plus view, which is just the last thing I'll ask for this podcast, and Mark can like do what he wants or shut me up or whatever. But when every time we're talking about getting into the processors and stuff, they're middlemen, and Dash cuts out the middlemen, supposedly, right?
Of course, yeah.
So, but there's got to be like a third way. So here's an idea. So if because payment processors will make money in the future. This is going to happen till the end of time. Now, say someone makes a Dash platform decentralized application that's like a payment processor app, and it runs off of Dash. You don't need to run your own infrastructure or whatever for it. And of course, if people can already take it into the wallet for zero fee, why would you put a fancy payment? Why would they pay for that? Well, couple things. First off, this is just a hypothetical. What if the payment processor people, first off, the companies become more tech support companies than actual technology companies? They don't produce the infrastructure.
They're part of the channel. Yeah,
and so they scrape micro fees from like the subset Dash transactions. They scrape micro fees, or so for example, say like the Edge wallet or whatever, they make every time you use Shapeshift or Simplex or whatever in there, they get a cut of that. And so anytime the merchant cuts, so they might make some of that, and they charge a little in exchange for tech support. But here's another thought: if all your payment rails and usernames and all that kind of stuff is already being taken care of by Dash, you can't make money off of it because Dash is already doing it. But what happens if you do make money by being part of that infrastructure? So, for example, what if a payment processor or a remittance company or whatever you want to call it just does not have an on-paper profit model, as it were? They get paid for educational things to sign people up. But what if they also run mining and masternodes, and so they are part of that infrastructure, and they just have it in their best interest to go out in the streets and generate more transactions through the part of the network that they run?
Yeah.
New mind-blowing future model, right?
Yeah, look, I'll give you an analogy that I think it's something that anybody who's watching this podcast who's in the IT and tech industry will probably understand. I'll try not to go too technical though, but basically years and years ago, Microsoft Exchange was the de facto kind of like a corporate email solution, and that required on-site deployments. So you'd have physical servers on site that handled Exchange at an enterprise level, and those, you'd obviously pay Microsoft the license fee for that, but then you'd need people like me to set that all up, install it, configure it, deploy it, make it work, and then keep it working, managing and maintain it. I got, as the infrastructure providers, as the channel providers, the solution provider, I got a really big slice of the pie for that. I added all the value. I'm the one making that solution work, and we, as a company, we would get paid well to do that. Microsoft wouldn't get money for that every month or week or year. They would just get the license fee every time they released a new version of Exchange or Office or Office and things like that. So that's how the model used to work, and that worked fine for years and years and years. And then Microsoft went, well, we're going to do this thing called Office 365 now, and we're going to host it all on the cloud, and you don't need on-site. You don't need on-site servers anymore to do all this. And people in the channel like me were going, oh, that's our livelihoods. You're effectively taking our business offers because you can do all of that instead of us, and you have a relationship direct with the client. You at the moment, I think for Office 365, you pay like $10 a month per user at a corporate level, and you can literally host your whole enterprise email platform with Microsoft directly, and that's taken a chunk of revenue away from the channel, from companies like mine. However, what Microsoft have done is they've changed the way that we do things. So we still migrate things onto the Office 365. We still manage mailboxes. We still manage that platform for the client. And we add value that way, and we still charge for it. And then Microsoft give us a commission on every license that's sold. So we still get a commission from Microsoft that way. And it's one of those analogies that, if you think about it, it's not too dissimilar to what you just said, Joel, about some future channel arrangement where Dash as digital cash is able to make micro commissions and micro payments in order to incentivize channel providers, solution providers, POS solution providers to use Dash. It's all about how to manage that evolution and change, because if you go in there like Microsoft did, like with 365, you just freak people out. It's just like, livelihoods. You could literally kill whole industries. You're that powerful. And it's the same with cryptocurrencies and Dash and things like that. You don't want to make enemies of the payment solutions providers and the financial system in general. You want to work with them, and eventually the better technology will win out, and they will have to adapt, and they will have to adjust to the new crypto reality. But
yes,
you've got to be cute about it. Don't make enemies of them, because they will close ranks.
well, that's one thing I realized is if we're trying to cut out middlemen, you don't have to cut them all out, at least not all at once. And more importantly, if you go to a payment processor, a payment provider that wants a leg up on its competitors, and you say, look, here's a way you can make money. First off, they're going to be they don't care. An individual payment provider doesn't care about the industry. They don't care. It's about them.
Just wants to make money.
So if you show them how to make money, and all their competitors crumble around them, even though the payment industry, the middleman industry is a smaller percentage of the pie, they don't see that. They see their own balance sheet.
Exactly.
Or what they can also see is, look, at some point we're pushing back this crypto tide. We can't hold it forever.
Yeah.
Okay, my apologies, everyone. For some bizarre reason, Joel and Michael have dropped off. As we've been approaching the 2-hour window, I really wanted to wrap up half an hour ago. So let's just see. Let's close it off for a second.
Am I back on now?
Yes, you are. I don't know what happened, but just getting loads of messages like saying, right, so we need to wrap this up anyway.
Yeah.
So it's been going on for 2 hours. You two need to just shut up, right?
We're going to anger Grandmaster Dash.
Get a room.
So look, Michael, thank you for coming on the podcast. This has been episode 125. If people want to learn more about the Dash Investment Foundation, or if they are a potential investment opportunity, where can they go to learn more or to inquire about the Dash Investment Foundation?
Best place to go is to www.dashinvests.org, and we have a neat little contact form on there, and that's by far the easiest way to contact us. And we respond to every email within usually within 2 business days, 2 or 3 business days. Even if it's just to acknowledge that we've had your inquiry. So yeah, that's the best way to do it. We're always available via the Discord channels as well. If it's just for some general questions or feedback or advice. So yeah, you know where to find me. I'm in both Discords, as are all the other trust diff supervisors. So yeah, look forward to hearing from you all.
So is that dashinvest.com or dashinvest.org?
It's dashinvest.org. Yeah.
.org. Okay, excellent. Well, thank you, Michael, for coming on. Joel, would you like to take us out?
Yes, absolutely. Just promise you won't orphan our blocks again. We got orphaned there for a while. But if you like what you're seeing and you want to just hear it because you don't like seeing our bloated faces, that Mark puts out a audio only version of this. He puts it in the post on the Saturday recap article on dashnews.org and has all the audio only stuff. So go there, like, comment, share, subscribe in that order, possibly. Who knows? And now it's time for something we call the after party, which has become legend by now. It has sparked the Dash Convention Europe, which just took place, and will spark so many more cool things in the future. So if you want to just jump in and do like this, just chat with the 3 of us and more people, just all pile on in, have a good time. You go to staydashy.com. That gets you into the Dash Talk Discord, the fantastic place. And then you just start asking around. Just say, where's the after party? Can I get into the after party? How's the after party going? After party, after party, after party. Ping myself or Mark, and we'll get you in there. And it's okay if you create multiple accounts accidentally and you can't figure out which one's going to go into it. Don't worry, we won't judge you for it. We still love you.
Excellent. Thank you, Joel. If you've enjoyed this podcast and you watch this on YouTube, please press that like button, smash the dash, and don't forget to share and subscribe. And also as well, don't forget to hit the notification bell if you want to be alerted about future video content. I hope you all have a fantastic weekend. I hope to see some of you in the after party. If you've enjoyed this podcast, it's like this, but it just goes on to the early hours in the morning. So make sure you get yourselves in there. Have a fantastic weekend wherever you are in the world. Stay positive. Stay humble. But most importantly, stay dashy. Have a good weekend, everyone.
Bye, everyone. And we're out.
Awesome.
He